Hey, we'll get rolling here today, and we just want to highlight a few charts, especially when you got these grains, corn and beans pushing to the higher end of some recent ranges, and you got this wheat market that's trying to break out. So we'll just go through a few things here. Here's a March corn, a daily chart, and you can see on that first red line, that's 685 right there, and that's been a resistance level over the last month. Now, if we can get above that point, really the next target then would be those fall highs in here about the 705 level. I mean, this is just a key level, right now. Either we need to break out and we're probably going to get that next 20-cent surge, or if we don't break out in here, you can see support is about 20 cents underneath the market. We think that both the bulls and the bears have some strong arguments. If you look at, a South American weather, you could say, hey, Argentina's got some rain, but some dry weather in the forecast, and the Brazil planting is a little bit later in here. So that could be a bullish argument. On the bearish side of it, though, U.S. corn, even though we're competitive right now in the world market, our export pace is really slow. At the end of the day, we think we're more or less two-sided, and corn would be more of a follower. When you look at the bean chart, though, right now, I mean, we're pushing right up towards that key resistance area. It's somewhere in the somewhere in the 1540 to 1550 area. If we get above there, contract highs at 1572, would be the target. What surprises us a little bit about on this bean rally is that it's occurring with Brazil harvesting their record crop. Argentina weather could get spun either way. We just read this as being more technical in nature in here. Specs we're buying, and really it's the meal market that has led us higher right now. If we could push us above this recent resistance right now, another 20 to 30 cents seems likely. On the other hand, to get much more from there, we probably need to see the South American crop getting a lot smaller. What bothers us on beans, though, is that you look at support underneath this market is a good 50 cents down. So risk to reward is a bit shaky. We find one of the more interesting charts right now is Chicago wheat, and that market has been beat up. But that light purple line that's on there is a 50-day moving average, and we're trying to push above there right now. That has held as resistance here over the last couple of months. And where that really sticks out is the speculators have the biggest net short in Chicago wheat in more than 4 years. Could this be the spark with wheat? If we get a push in here right now, you could see a 30 to 50 cent rally. We want to get over to the crude oil market, and we've had guys ask us about locking in some fuel needs. Here's crude oil over the last couple of months. We've really been in a wide ranging $70 to $83 range. We have that line down at $70 because the federal government has come out and said they're going to buy up crude oil for the strategic reserves if we get down to $70. And why is that a big deal? In 2022, we brought down the strategic reserves from 592 million barrels down to 372 million. That's a 220 million barrel drawdown. In the U.S., we use about 20 million barrels a day. Therefore, if we break down to $70, that to us is going to be a good support level as the federal government probably looks to refill back up the strategic reserves. When you bring this over to the heating oil market or looking at locking your fuel needs, right now we got front months heating oil around 310. $70 crude oil could bring that down to the 270 area. Here's a natural gas chart, and this is a monthly chart. We just want to show you how fast things can turn down in here. We've got natural gas close to 260 right now, and those red lines on there is between $2.50 and $4. And we're highlighting that because the majority of the time over the last 10 years, we've spent in that range. Even with natural gas getting beat up in here, the trend being lower, we're starting to see some points of value. As we want to wrap up here today's market commentary, I think the biggest thing on the grain side of it, can we break out? That's something to really watch in here today, tomorrow. If we can't break out in here this week, these markets are built on momentum. We would have to say that resistance is holding. What's a bit odd for us now is it seems when you look at the war between Ukraine and Russia, it's starting to heat up, yet the media is really kind of ignoring it. Is it a situation where it can, tensions increase more in here and continue on, and that we just ignore this? We think that's one of the biggest question marks right now. The last thing is when we talk about a market being bullish or bearish, how much is it really priced in? And the market that sticks out to us now is the cattle side of it. April 24 cattle traded up to 70.95 today. That's within $1 of the all-time high set back in 2014. We bring this up because are the bullishness fundamentals really priced in? And you can even make that argument over into the grain, saying yes, there's support on front month beans, but we're already at 15.50. Yes, we're bullish on cattle long term on declining supply, but April 24 is already approaching $71. So we need to keep values in mind when we go back to a bullish or bearish bias. Any questions or suggestions on a webinar here or for a report, let us know. Have a great day.